We get a lot of questions about how we can actually identify this institutional rotation and accumulation in different areas of the market, and then specifically when it comes to particular stocks. And so I want to take the next 3 minutes to kind of talk through this trade we have right now on MP. It's a materials related name, and the trade right now is currently up 40 or 50% for us. But it all starts with looking at sector rotation and the strength there. So the first thing I want to point out is that retail is not pushing sector and industry strength or weakness in either direction. This is institutions coming in, banks, larger financial institutions, hedge funds to a certain extent. They really control the primary trend, the narrative of the market. And it's a totality of what they're doing, not necessarily a specific bank or financial institution, but as a whole. And they influence trends on a sector and an industry basis, and that bleeds into individual stocks. So the earlier you can identify these sector and industry rotations, the leaders, etc., the earlier you can get in on the best looking stocks and then hopefully make a bunch of money. So year to date, I just want to point out that materials are outperforming the broader market. S&P 500 is down 3.5%. You have tech and consumer discretionary down as well. Leading the market here are a basket of more defensively positioned names, and one of those is obviously materials. Now, MP, if you're not aware, is a rare earths metal play. We'll actually look at that in a second on TradingView, but keep in mind it's more of a materials-based type of play. Specifically, it's held within the metals and mining ETF. So this is an industry group within the materials-related sector. Think about the hierarchy. There's 11 sectors, main sectors in the United States markets, and within those 11 sectors, there's nearly an infinite amount of industry groups. Koifin gives us a pretty good snapshot of a bunch of them. Metals and mining is going to be one of those industries within materials. So you can see your XME is up 2.74%, which is not a lot, but it is still leading the market. That's important. This relative strength concept matched with this absolute strength concept bleeds through everything we do inside of TTI. We need both of those factors when we're looking to enter something, particularly when the market is being riding through some volatility, very choppy right now, obviously down once again 3.5% on the year, but metals and mining is not. So if we actually go and we look at the holdings within metals and mining, so we're going to look inside of this industry itself, and what we want to do here is figure out where the leaders are. So what we did a couple of weeks ago when we saw materials leading the market, when we saw metals and mining leading the market, we actually dove into this ETF itself. And normally what I like to do is I just like to sort by return year to date. Obviously right now MP is the second best performing within metals and mining, up 68.27%, but it wasn't 68.27% when we opened it. As a matter of fact, it was sitting somewhere closer to 45 or 40% on the year while we first looked at it, and then we took a position. And I'll show you where we took the position in a second. But what's important to understand is we can see the sector and industry strength come in. And once again, that's not retail influencing that. That's financial institutions, banks, hedge funds, etc. These are the entities that essentially push primary trends in whichever direction they're currently moving. Because once again, retail just doesn't have the liquidity to do that. So when we were going through our process, our top-down process, and we go, okay, we should probably be looking at something within materials. It's outperforming the broader market. Within materials, metals and mining are outperforming nearly every other industry group, and it's also a bright point within the materials sector. Let's deep dive metals and mining. MP came to the top through our scans, and at the time, it was basing this beautiful stage one base at the beginning of the trade here. We opened it somewhere in the first week of February. It's currently the third week of March, so we've been in this trade for about 6 weeks now. We saw this trade pressing up and over 23.5, and if you're a fan of Stan Weinstein and the cycle theory, this looks like a patented stage one base. Now, what I really like about stage one bases is we can use the VRVP indicator, which is this volume indicator along the y-axis, not the x-axis. This gives us volume by price instead of volume by time. Volume by price allows us to pinpoint financial institution accumulation. It also allows us on the other side to pinpoint distribution. So if we're expecting something to roll over, we would expect a lot of volume in some sort of horizontal channel to the upside, your patented kind of stage 3 distribution. And on the other side, the stage 1 accumulation base, which we obviously saw. You can see there's a really big spike in volume here. Retail, once again, is not causing this type of volume accumulation down here. This is financial institutions. At that point, we just need to wait for some sort of entry trigger. And for us, that's up and over a previous previous resistance level that we've been trading under since the middle of 2023. So we slipped under 23.5 back in July of 2023. We entered this big stage 1 based financial accumulation via institutions, banks, hedge funds, whomever. And then we get the trigger at the 23.5. To increase our odds of a successful trade, we want to wait for the 200-day moving average to be sloped to the upside. Obviously, price should already be up and over it. That's a very easy rule to follow. Above the 200-day moving average is going to tend to be easier to long. Below the 200-day moving average, it's going to be more difficult to long, potentially easier to short. Primary trends, right? They matter. And once again, financial institutions and banks and stuff, those are the guys really driving the narrative on price here. Above 23.5, we were able to buy this thing into a breakout with a price target north of $32, and then potentially up here near 45. Above an upward sloping 200-day moving average, and then also third component of kind of the TTI system, along with trend and relative strength, is momentum. As you can see here, we use the RSI a little bit differently than everybody else. People like to look at overbought as an opportunity to sell and oversold as an opportunity to buy. We play it the exact opposite. We like when things are overbought because it's signaling to us that there's a lot of momentum in the stock. And as a breakout style of trade that really needs momentum on its side to really bring in a bunch of capital, a bunch of profit off these trades, we want that momentum. We want people to be buying this stock. And so what we do is we look for momentum regimes. When the RSI hits overbought and then continues to range above oversold, meaning it never taps 30, we consider that a bullish momentum regime. While a stock is trading to the upside at a breakout point within a bullish momentum regime, we assume that every dip, for the most part, is going to be eventually bought and prices will continue to rise. As soon as the RSI breaks down below 30, that bullish momentum regime is over, and potentially we are entering something called a bearish momentum regime, where selling momentum is going to start picking up. So we would more than likely either close the trade if we haven't already, or avoid longing it again. So MP here, once again, breaking out of a stage 1, potentially into a stage 2 markup. We like this name. It's very volatile at 6.18 ADR. Moves about $1.42 per day. From a swing trading perspective, that's great. We have price targets lined up here just based off of basic fibs. Math, it works. It keeps our risk to reward relatively high. And financial institutions at this point are arguably not buying it anymore, right? They bought down here sub 23.5, and now what we're getting is kind of the remnants of that. They gave us the opportunity to let this price finally break out and come up into this markup period, and now we're going to start seeing more retail hands coming in. And just to be fully immersed in this trade, I believe this is the only rare earth metal company in the Western Hemisphere that's kind of doing everything. And if you haven't been watching the headlines out there, I think the Trump administration just came out and said they were going to invest a bunch of money into rare earth metals today. I think that news just came out. So this, not only is this company is fundamentally kind of positioned to do well, but we've seen that over the last couple of months with price appreciating nearly 70% year to date already. And obviously it looks like this thing wants to continue to really rip here. The last thing I really want to point out, just from a technical standpoint, is this thing IPO'd back in 2020. And if you look at the entire cycle of how this thing traded, we had the initial big breakout back in the 2020 to 2020 end of 2021 bull market. We saw the curl over and the subsequent decline, and this most recent bull market really started, at least it bottomed in October of 2022, but it really started, we'll say, beginning of 2023 when we started to get those higher highs. This thing didn't really get going until August of 2024. So this has not been a big contributor at all to this bull cycle. So this is more of a middle to potentially early, late stage bull cycle play. So will this thing continue to run another, 1,000%? Probably not. But we have some realistic targets here based off of math. And like I said, I like to see these things come back and retest near their IPO price. It really washes people out. And then you can see that financial institution accumulation coming in again off of this stage 1 base. So that's how we like to play nearly every trade. We want to be on the same side as the financial institutions and the banks. They are the ones that are determining the primary trend. Secondary and intraday trends are more easily manipulated in the short term, but primary trends are almost impossible. Or if you ask Mr. Charles Dow over 100 years ago, they literally are impossible to manipulate. So we like to trade with the primary trend. MP is a great example of that, matching sector and industry strength, finding a stock within the industry that we wanted to trade, not only verifying it from a technical standpoint, but also verifying that there is financial institution accumulation, and then obviously putting the trade on and hopefully making a couple bucks. Our options trades are up about 40 or 50%, and from where we actually opened it, the commons are up about 14%. Hopefully that breaks this down. If you're interested in trading this way, I highly encourage you to check out TTI. You can check it out in the link in my bio. We take these types of trades every single day. They'll get shot out to you via your inbox, whether you're on your computer or your cell phone, and you can take these trades with us live. Okay, thank you for joining me, and I'll catch you in the next video.